Want to bring in Rob Luna and Keith Fitz-Gerald. All right, guys, it's only up from here, huh? Let me start with you, Keith. Listen, this rally, a lot of the air was knocked out of this rally when that Peloton news hit, and I'm telling you the reason why. So a lot of people feel like they got the shaft once again, that this system is corrupt, that no one's watching out for their best interests, that you have a company that was hyped up every day on TV, and we all kind of played a role, some more than others. But the insider sold $500 million worth of stock, and I can't wait to ultimately find out that there was nothing there, that the whole thing was a scam. This is just my thought and opinion. We don't have any facts on it yet. And go ahead. I'm sorry, Keith. Where do we go from here?
Well, I got to tell you, Peloton situation is disgusting if it's true because, I was born in the middle of the night, but it wasn't last night. The fact that they sold $500 million in stock, suddenly they're going to hire McKinsey, and now, coincidentally, voila, they're not going to produce. I think you got to keep one eye on the exits in here. This is very much a time when you've got to focus on the best, not the rest. So the best is going to be Apple. It's going to be Microsoft. It is not going to be companies like Peloton.
By the same token, Rob, we know any sort of emotional selling gets excessive, and excessive selling creates opportunities.
Yeah, no, it does. I mean, I completely agree with Keith, though, here. And I don't really think that, Peloton is a market leader, canary in the coal mine. You point out these things all the time, Charles. But look, there's a lot of good stocks that have gotten beaten up here. To your point, it's obviously not only up from here. But, guys, look, the fastest growing companies out there, I like Amazon and Microsoft and all those. But look at some of these other names like Palo Alto Networks that continues to crush it. ServiceNow down 25–30%. These are going to be next week, next month's leaders. Here's your opportunity to jump in.
Would you add the caveat, though, they can be extraordinarily volatile for anyone who may not know that?
Yeah, but look, stocks are volatile in general. It's not an asset class you park if you're looking to take it out in the next 2 or 3 weeks, right? But as we all know, stocks over the long run go up, and especially when you invest in high-quality companies. It's one of the only places, Charles, on Wall Street where no one wants a discount. Everyone thinks something is wrong, but, I've been doing this 25 years. If you buy high-quality companies down 10, 20%, right, plug your ears, you're going to do well over the long run.
And one of those companies that's done extraordinarily well, perhaps against all kinds of odds and negativity, is Netflix. They're going to report after the bell. We know it's been a juggernaut. So would you be a buyer of this, Keith, ahead of before the closing bell?
I got to tell you, for the first time in a long time, the answer to that would be no. I think they might actually flub earnings. So I'm going to hold back, want to see what the numbers look like. If there's any resumption in selling, that's when I'm going to think about buying, because to Rob's point, and he's absolutely on the money here, you buy low, you sell high. That's how the game's played.
Rob, some of these names, and maybe not Netflix, but a whole lot of really good middle-tier quality names are down 20, 30, 40%. Are they down so much now that you don't need to try to, quote-unquote, pick the bottom per se?
Yeah, I agree, Charles. Look, and you just said the correction on the NASDAQ came in at 10%. A bear market's only 10% more from here, right? So if you can stomach a 10 or 15% additional decline, which if you're in this market long-term, you need to be prepared to do, start picking up these high-quality names now. It's impossible to pick a top or bottom no matter what you hear on Twitter. No one does that consistently. Buy high quality and stay the course.
All right, so we got we got Palo Alto, and now we need one from you, Keith. Give us something new.
I tell you what, I'm digging around at a little tiny company called Lemonade. It's profit for a short squeeze if you look at the Reddit crowd, but it's shaking up the insurance business. It's doing things by AI, and I've got to believe every conventional insurance executive sees a lion on the horizon. So that, to me, is a stock I'm very interested in, particularly since it's been beaten down so much.
And this is not Lemonade Stand. This is Lemonade, right? Ultimately an insurance giant. That's what you're telling us.
Correct.
We got to leave it there. Rob, Keith, thank you both very much. We needed you a lot today.
Hi, it's Keith here. Thanks for checking out today's highlight clip. What'd you think? Did I make sense? Is there something you'd like to add? Make sure you leave a comment down below, and of course, click subscribe to keep up right here on YouTube, or sign up for the email newsletter at the link below. You can also find me on Twitter and Instagram for my real-time thoughts on markets, analysis, and a whole lot more.